Welcome to TradeTheMBI.com. This is John. This report is for the 20th of May. And, well, cyan candle struck again. Plus 7 3/4 on the day from the previous close, which was, let's mark that so we can see it, 74.75, 81.75. What was interesting was we had a nice dip in the pre-market, which allowed for early entry on it. And that just made it all that much more valuable. So pretty straightforward. Unfortunately, these readings still are not all that fantastic. I mean, we got no crossover of green. Red, white still continue to fall. The only advantage has been that you had steel moving higher and had the buy above cyan, which improved, and just pretty soft from the cyan, though it hasn't dipped below the zero line to really confirm a strong up move. So can't really endorse anything from a super move here. It looks to me like we're probably either going to be flat or consolidation if we even have some continuation. So off the NQ, buy signal there. We just returned back to where the previous one was. You cross over in the death zone here for the NASDAQ. Decent readings, though, from your steel moving higher, green moved higher. So all those are going in the right direction from a long standpoint. From the down standpoint, not so. And you can clearly see the difference between the way these are looking. So the Dow looks incredibly weak comparatively, and a pivot lower on the steel, and we would expect this to come right back down to the lows again. So a little bit of a dichotomy in there. Well, let's put up the reading so we can get a broader gauge of what's going on. This happens to be the NASDAQ. So we get a little bit broader mix now of our buy and sells, where we've been going lopsided one direction. SPY or S&P overall 100. A little bit of a mix, more on the sell side, and then Dow should be a little uglier because those readings are not as healthy, and it is. And it may just be that money is seeking the broader market, feeling that the big names have already been tapped out. A bunch of new buys and sell signals within some. A lot of these have been depressed, particularly the high flyers that we typically show. So it's not a surprise that they've gone a little weak, and some of the peripheral market made up for it. Thought I'd throw this one in here per the request of some members, TLT. All it's done here is pretty much retrace this positive extreme right there, and did a beautiful job of doing that just the other day. In fact, finished right on it. Still nice, though, within the number one, steel in the safety zone. You also have cyan well below zero and below red and white. So just a matter of a little bit of a retrace to fill that back in, but nothing critical there. USO continuing its rise. So these are all indications that general market health is pretty darn good. And then you have weakness in gold. So again, it doesn't have to be, and a lot of people want to make strong correlations between some of these. It just isn't the case. There will be times when, yes, they are strongly correlated, and other times they're weak. And I've done some work on comparing those kinds of correlations. I think it's just more healthy to get a broader sense of when you see commodities not really exploding, then your concern about inflation is greatly diminished. Likewise, when you see oil doing well, then you have the idea that there's going to be economic growth. Just some general macro ideas so that you can get a gauge as to whether or not you should be more concerned or less concerned about holding on to equities. And at this particular point, there's just no other game in town. CLF, interestingly enough, slight improvement there for the green. Opportunity, though, to turn around, potentially sell 16 puts on this one as an early entry point. Still, despite the drop, puts in a cyan candle. I think that's worth looking at for the long side, even from a 78-minute standpoint. We can take a look at it. Still in the negative red here, but it's interesting, even despite that declining, you've got green staying above red, white. So also you've retested lows on higher extreme. That definitely, to me, is one that you should be putting on your radar. AIG had been in that safety zone, it's just coming out of it now, and at this particular point, having cyan dramatically dropping jumping above zero, as well as the cave over of the long side of it. So while we were looking for the retrace, this decidedly got ugly to the point where I would not be selling puts in this particular case and would be selling in the money calls if I were in possession of it. For the 50K, and boy, wasn't that sweet from the other day, being able to know that we had our cyan candle. It did retrace quite a bit. We'll look at the intraday setup on that in just 1 second, because it was kind of fun, actually, the way it worked out, and really was kind of boring after the early pre-market, because everything else had pretty much been decided from that point. It was pretty straightforward. Let's see, where did this enter? 67.50. Hasn't put in a stop yet, so there you go. From that standpoint, didn't get a double entry like we did over here. It was just a single one. That's because the separation got too big too fast. But nice breakup into new zones. Did dip below briefly for a moment, but the troubling part of it is not getting the crossover here of the green. Not to mention not getting a crossover of red above white. Then you just develop right now here is in the process of developing the steel below cyan. So we could see some little interim weakness at this particular point. The fact that we've moved into a new zone helps maintain it, but if we dip back below that zone, then you'd have to be looking at lower pivots on the red, and I would definitely be looking to see a pretty good sized retrace out of that. So bear that in mind. Let's look at intraday. Flipping to the 5K, we get an interesting look here, because you can see, just showing what I am for the day, how small the overall volume was compared to like Friday, where I would have to just keep scrolling back here to get to the end of the day. Just shows the relative interest in Monday's action was not all that hot. So what happened was we had the nice move. We had all these positive extremes to retrace, going all the way back over to here. Beautiful retrace on those. Popped up from the deep red trend, though. Cleared it pretty quickly, so right in this range. I started to get long on the pivot, just anticipating that retrace setup, and worked out just fine, and we never even came back to it. So I would have been prepared to add on a new signal had it happen. Market opened up, and then it wasn't until this cyan that I'd taken some profits, re-added on this one, and then just left it pretty much to percolate and do its own thing. Every time it got to the positive extremes, would take some gains. Nothing special. It's a pretty simple chart. Didn't get much easier than that. Though we can see that there are some positive extremes that still need a retrace. Let's see it be right here. Oh no, that one got hit. That's fine. So nothing special. Then I guess you'd have to come back to these, but these all got taken out intraday. So there you have it from that standpoint. We'll look at a few of the alert stops. So this one starts with Apple, and we can see the nice turnaround here. It had always been above the cyan. We'd always had the steel in the safety zone, so weren't expecting a whole lot of weakness other than maybe just a retrace of these positive extremes, which did take place. And sure enough, a little turnaround on the move up from steel. Then we had it followed up here with the green, and you can see the results. So breaks into the new highs. It'll be interesting, because now we're about to face this point coming up here. That would be still a buy if the steel dips above it, but then you'd be looking for it. So potentially another day or two, things are still in pretty decent shape for Apple. We'll take a look at Amazon. Was nothing and continues to be nothing. Never liked those buy crossovers that happen with declining red, and you can see why. Though this improved extreme histogram, not horrible in this instance, not to mention the fact you're still staying above with steel, but unlikely you're going to cap that previous peak of the steel. So it's going to be a little bit longer before anything happens with Amazon. Google, narrowing the range, and see Google is one of those where, while it's not been terrific with these crossover signals, you've had the green staying above the red and the white, and now that you're reaching the crossover point, could potentially turn a nice buy, and still you've had the steel also above the cyan through the whole measure of this consolidation. I mean, it's been weeks of nothing. Netflix had put in the buy from the green there. Steel had just about crossed over, so all that took place there on Friday. and those are the kind of things that start to look good. And so when it opened up completely higher, as well as improvement on all levels, red, green, and steel, it was an easy ride up for that. Likewise, looking at PCLN, it improved pretty decent off of that. Signal was pretty weak to start with, but the open of it, even though the open was lower, led to the crossover in that. Will it last? Doesn't look like it will. So you just have to play those intraday. Not that big a deal. Tesla had been above the red and white here for a little while, waiting for the meet right here. It's now there on Rising Stream, so potential for a nice bullish crossover here. Looks pretty good. You would need to see red cross above, and that will be in the death zone if it does. So not great from that standpoint, but could still produce a nice pop. Everyone said that the bottom in Twitter was in. We'd still been having sell signals with it, and sure enough, it still keeps just whittling down. We're down to, we had the low 31.64. What is the low right here? 29. So, I mean, you're just dipping back to, the levels all the way over here when everyone declared the bottom in, and you're pretty close to right back to the same spot. It still keeps finding some support there. It's not horrible yet. Baidu had that small. I mean, these are almost identical when I look at these. It's pretty consistent. So it's like they all had their run of overdone a little bit, have retraced. FAS with the rising steel, this is all a steel move. So is it likely to last if it doesn't get some follow through? No, and I'd be looking for that retest on any weakness. So potential for looking for puts for FAS could be interesting. And Facebook, a little de facto cross. We had the cyan declining here for the last few days when the signal came in. So, and you also saw the nice rise of the extreme here. It's been pretty decent. So that wasn't too big a shock. You're going to need to see that be a little bit more dramatic and follow through to the open and seeing a nice narrowing of that range for it to get even potentially exciting for a decent run. I mean, it doesn't mean you're not going to have these pops, but as it is right now, that separation, as long as that maintains itself, and typically per a zone, and if you have a zone difference and then you get to move up, usually you get a much bigger breakdown to that. So there you have the basics of it. As always, continue to look for me on private Twitter feed, StockTwits. Trade well.